The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials right now down 14. You get the Nasdaq down 15. S&Ps are down 2. Gold's off 11.60, trading at 13.06. We have silver down 17 cents, $16.14. Light sweet crude down $1.16 at $60.48. Notes and bonds. You get the 10-year note up 6 ticks, 120.07. 30-year bond up 143.15. King dollar up about 314 ticks, 90.865. You get the euro trading at 121.58 to $1 US. The yen is at 107 to $1 US. And we have some volatility, man.
Quite a finish to February yesterday, right, man?
I'll tell you, man.
Brand new month, but that was quite a finish for sure.
And, you know, if we go take a look at these E-minis, what you're going to see out here this morning, you want volatility, folks? You want lots of trades? Well, we have them. Out here this morning.
Talking about a two-way market, right?
You got it, man. The spread out here this morning, 27.22 down to 26.98. So just starting the day, we already had a 24-point
almost
S&P.
a full percent.
S&P spread.
Gotta love it.
Pretty amazing.
VIX back over 20, right?
Totally.
Yep.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at 10 o'clock, 10 to 11, 11 to 12. Right?
You got it.
Yeah.
We're 10 to 11.
Yeah, exactly.
He's not sliding in just yet.
Seriously. 11 to 12. You want to understand options upside down. You want to understand defined risk. Kevin and his team, they got a great show. A couple different ways you can get it. Just go to TFNN.com, hit Tiger TV. Just go to YouTube and pull up TFNN.
That's
you
right.
get all the programs. Hit subscribe. It's free.
Rocking and rolling, man.
Every single program comes right up. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
I got to tell you, you know, when I sent you a picture, and I had to send you a picture because when...
Uh-oh, what's you saying?
Well, no, when at the Traders Expo, it was so cool,
Oh,
right?
yes, you sent me that picture too, man.
You know, so
so
picture, folks, you know, TD Ameritrade, they had a beautiful booth anyway. They had the best booth there. You walk in, but Kevin and his team... They had a picture tube.
Kevin, Victor Jones, right? They get the whole lineup. I loved it, man.
And
big screen TV.
It was
Kevin, you're a superstar, man. I was looking at it.
I'll tell you, man. You know, it's so cool, Kevin. It actually the digital was so clear. I mean, when I took that picture, like I was like, you know, 25 yards away.
No,
so I could get it in.
I saw the same picture you saw, Kevin. I mean, it was amazing. Yeah.
Yeah, every time I think I'm getting a little important in the world, Tommy, my wife just says, "That's great, honey. Take the garbage out."
Got to stay grounded, man. That's a beautiful relationship.
You know, you know, it's cool. I mean, for traders, that's important anyway.
Everything's important.
It really
totally.
It's
you know, if we know one thing in this business, is that there will be times in this business when you feel like you're the king, and there'll be times when you are so humbled that you think, if I owned a funeral parlor, no one would die. and it's a constant struggle between, oh my gosh, I can't do anything wrong, and oh my gosh, I can't do anything right.
Now, you joke, Kevin. I was just saying that mentality is so important, though, man, to get over that, because you're going to deal with losses. You're going to deal with bad streaks. You know, you got to have your losses in check and just be ready for it, because, like you say, man, it's coming.
Right, and the key is not to take either one to heart.
It's so true, man. It's you know, it's so true.
They are coming on both ways.
Oh.
You know, it's happening. No matter how good of a trader you are.
It's normal.
Law of averages, regressing to the mean, both ways. Exactly.
Totally. It's the King Kong syndrome. You get the King Kong syndrom, you better watch out, folks.
It goes both ways.
And we all get it. Don't get it.
Right.
After you do it for a while, I don't think you'll get it. If you start feeling it, you got to say, oh, we got to back off real quick, man, because you're gonna get slapped in the head in about 2 seconds.
No way. If you feel like you're king, and then you feel like you can't do anything right. But yeah, they both come. Right.
Totally, man. Pretty amazing. Well, we definitely have a trading market out here, Kevin.
Yep. And if you're a trader, you got to love these markets.
Yes.
Right? Because it's two ways. I mean, you're buying dips and they're recovering. You're selling rallies and they're failing. This is in its purest form, a trader's market.
Yep. 1% one way, 1% the other. VIX is over 20. It's holding steady. It's back over the average. I mean, you would tell us, Kevin, what was the average? 15 or 16 in the VIX?
15.39 once it went to the S&P 500.
And that was almost impossible to believe over the last year. And meanwhile, now we're kind of back in the normal territory of a market that moves both ways and the VIX that correlates to it.
And frankly, Tommy, this market and the moves that it's been making justify that VIX level.
Definitely.
I know people look at it and say, that doesn't mean it's going to stay there, but right now as these markets are moving, that VIX is completely justified.
1% is standard one way and the other lately. It really is, even this morning almost, Now,
20 VIX is showing about a 1.25% move on average a third of the days. That's what a 20 VIX is looking like. So, I think with the moves we've been getting both up and down, it's absolutely justified.
Yeah, it's a third every third
1 out of 3 days.
I like it. Okay.
Yeah.
Right.
I got it.
Right.
Okay.
Yeah.
And, at TD, I know Tommy's been talking to you about that, but you had a big move. You moved over 3 million accounts from Scottrade on Monday, right? Over the weekend.
And relatively, now it's not, always, but really with no incidents.
Right.
No major incidents.
Gotta love that.
The team that did that really worked extremely well to make those Scottrade people as comfortable as they can be.
That's great.
No, I met a few of them at the Traders Expo. They're happy. That was really, and I'm sure that you'll get them used to the great platform you have.
They're happy, and I think, in my opinion, they're going to get happier as they realize all the tools that we have and the education that we focus on.
No, there's no doubt. There's no doubt. So, what are we going to talk about today?
Today we're going to talk about futures and futures options.
Oh, cool.
We're going to go through our A block. Will go over all the market data that you saw, and then quickly we'll go into futures and futures options today.
And we've got some movement, man. I mean, wheat yesterday. Holy cow. And I guess the big storm coming to the East Coast, I don't think that's going to hurt wheat out in the Midwest. But bottom line is that this storm that's coming into the Northeast.
Is it? I haven't been paying attention.
They're talking about like a couple feet of snow, but they're talking about hurricane winds coming in.
Man. Right. That's what I'm hearing. And, the grain markets are rocking, Tom.
Yes.
I mean, the weather in Argentina, they feel... Right, it's starting to do some permanent damage to the crops in Argentina. Some of the rain we're getting in the Midwest, they fear may delay planting. So there's remember something. In times of uncertainty, stocks and stock futures go lower. But if in times of uncertainty, commodities and commodity futures go higher.
Yeah.
Right, it's an opposite reaction to the same event.
Yeah, that's so cool, man. I mean, and it's intriguing is that, you saw copper come off the lows almost a year ago now. And even when it was that happened, I says, okay, is this going to be a whole commodity complex thing? And you never know, but it's kind of wild how it's working out that the softs are coming off now. It's like, okay, and now all of a sudden we get weather events. And, I haven't certainly done it, not even close to you, but weather events in the commodity market can be real great.
Well, they are the drivers, and they are the drivers of volatility, true volatility, because think what they affect. A weather market in grains will affect supply.
Yes.
Right? And that can throw some real volatility in that supply number.
And the last thing, you have President Trump, I think, speaking at 11 o'clock. You may have some steel and some aluminum. You may have some headlines in the market for that hour as well, Kevin.
That's right.
There you go.
Hold on.
Very interesting.
Right here, folks, 11 a.m. Kevin, we look forward to the show in 45 minutes. You have a great one, a safe one.
Thanks for having me on, guys.
Thanks,
Thank
Kevin.
you. Stay right there, folks. Tommy and I are coming right back. We get natural gas numbers coming up also. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now flat. Nasdaq is down 15. S&P is a flat. Let's go over to that natural gas market. Man, natural gas has been moving out here today.
That was quite a move, right? So about 8:45 in the morning, jumps from, call it, below 265 to above 270 in the span of these are 5-minute bars we're looking at. About 20 minutes, 5-penny move. So
and that might have to do with that storm.
Yeah, you're saying Northeast might be getting a storm, you know. It's quite a move in 20 minutes. I don't know if the whole world found out a storm was coming at 8:45 this morning, but there's buyers there for sure, no matter what. So yesterday we looked at oil, right?
Yes.
Quite a move in oil you had yesterday,
huge.
both directions really.
Right.
Oil's still jumping around this morning. So Thursdays, 10:30 a.m. Eastern Time, you get the EIA inventory report on natural gas. It's 10:19 as we speak, so we got about 11 minutes till those numbers are released. And we're looking at natural gas, the April contract. So we're trading 269.38, almost at 270. So let's take a look at some of the trades that you can put on using maybe the spreads. Maybe we'll even take a look at some of the binaries. Right, we're going to look at both sides of this. Let's start out with the 11 a.m.s and see how they line up. Now, one thing is that because we've already gotten quite an acceleration here, right, from 9 a.m., when you jump to the 9 to 11s, these get set just prior to 9 a.m.
Yes.
Well, getting set prior to 9 a.m., this was trading down at 265. So just kind of walk people through. So you can see that the three spreads were set with one spread straddling 265 being the dead center.
Yep.
And then one spread with 265 being the lower end, up to 285. One spread 265 being the upper end, right?
Yes.
Now, when we're looking for these volatility trades, it's nice when the spread lines up where the price point is right at either the floor or the ceiling for two different spreads.
Yes.
So the 11 a.m.s are a little tough. We'd really be looking for like maybe a 270 spread where we'd be taking bullish side 270 upwards.
Yep.
We're buying that one. Maybe bearish side 270 downwards. So with that in mind, let's jump around to maybe the noons, 10 till 12. So there we go, right? This is what we're talking about. Now we have 270 to 290, and to put things in perspective, just to really understand why these are different, these get set prior to 10 a.m.
Right.
Well, where's the contract prior to 10 a.m.? Within like half a penny of 270. Okay,
right.
So that's why they're getting set at those different levels. And that's what's nice is they have these contracts rolling throughout the day, and you'll have ones that get set right before 11 a.m. that are going to trade from 11 till 1, right?
Yes.
So you're always going to have these. So start it off. Here's our 270 to 290 spread. This would be your bullish spread. We're out of the money on this spread right now completely. It's all going to be premium because you only have value from 270 to 290. We're underneath that level by less than half a penny right now. You'd be buying that spread. That's going to cost you $12.
Yep.
And then if you wanted to take a volatility trade where you have both sides of the market, you'd be selling the bearish spread. This one is going to have, call it 4 ticks of value. And so that's going to be, and what's nice is they line up so well, there's the difference, $4. That's the difference is you're paying for intrinsic value on the bearish side because you're at 269. It was at 6 when we first set it. So yeah, you're looking at about $28,
not bad
which is
noon, too.
2.8 pennies, right? So call it 3 pennies that you need in movement away from 270 to be your break-even point up or down. And like you said, that's for noon. You'd have a good hour and a half after the numbers come out. You can always trade out one side if you want to, trade out the other. And we're always looking at the volatility trade on this. If you're just directionally biased, you could just be buying one side or the other of this.
Sure.
You know, I mean, we're looking at it because we're really looking for volatility. We're willing to pay a slight premium with the news about to break, looking for a move in one way or the other. But guess what? If you're just bullish and you think the news is going to come in that this market's going to pop, well, then you're buying the 270 to 290, right? You're just putting up $12.
Right.
And then you're only looking for a move to 1.2 pennies above 270. So call it 271.5 or something like that.
Huh?
Right? You know, I just want to put it out.
Yeah.
And then the other side, let's just jump into some of the binaries because we don't normally jump in here, and let's just see what kind of options they have. So let's jump to the 12s. Same deal. So we're going to pull up a chart. So right now, give or take, we're trading at about 270. And what's nice is if you open this up, right, graphically, you can get an interpretation real quick with where these are. So this is going to be your 270 line. This is going to be your 271. All right, now these line up. You can see them. So anytime you're right at your price point, call it like 270, it's going to be right around 50, right?
Yes.
Because there's a theoretical 50% chance that you're going to close above or below that level.
Yes.
Right? So when you get up to 271, you can see that, you know, 271, you could be risking 32. So you're only putting up 33.
Right.
If it trades over 271, you get 100.
Right.
So that, I mean, that's just, you know, options to think about. If you're really looking for a dramatic directional move, and here's the markets here. I mean, if you really think that this thing's going to pop, maybe the play is that you're purchasing an out of the money binary above 273. You're putting up right now
$15.
$15 to make 85.
Right.
Just something to consider depending on your market bias and what you expect is going to happen. You know, the spreads are nice. I know we love the spreads because it's not an all or nothing game sometimes, which is nice. But depending on your market reaction, sometimes if you're really thinking that this has a good 4 or 5 penny pop by that time in one direction.
And that's right. At certain times, you should definitely check them. I mean, because a couple of times in my golds that you could actually, the risk versus the reward, because what I was doing is that what happens, folks, is that if you buy in near the bottom of the floor, right, and you think you're going to get a pop, a couple times I could get the binary for the same price.
Yes.
And the expansion would be much more.
Yeah, because, you know, on gold trades, you've pulled it up. You're looking for maybe a $5, $6 price movement in gold.
Right.
And you're looking for it in one direction.
Exactly.
That's a bold bet. You know what I mean? And if your convictions come true and you choose a binary, there's a huge payoff there.
And particularly what happens is if you're buying near the bottom of the floor, well, you're almost buying a binary because if it goes in the bottom of the floor, you're losing all your money anyway. Sure, as in you have no intrinsic value in the spread that you're buying. Right. You know, as to this bullish spread right now,
you're paying all premium.
Yes.
You have no intrinsic value in this. So if it expires right where natural gas is right now, you lose your entire investment.
Right.
So that's where they line up somewhat similar, where it's an out-of-the-money binary, where it just becomes a conviction where, you know, the difference being here is if you took that binary at 273, right, your profit potential is capped at 273, but guess what? That's where all of your, it's all or none at 273.
Right.
As opposed to the spread, you have value up to 273 all the way up to 290, but guess what? If it expires at 272, you're still getting value. As opposed to the binary, that's still an all or nothing loss, which is where they differ.
So let me bring this up. Let me just look at natural gas for a second, see where we're at here. So what's, we'll make sure we're on the right contract. Well, we're never on the right contract, it seems, in the natural gas area. Not that we're not in the right contracts, it's just that, okay, so this is interesting. So you get 56,000 contracts. We're trading, interesting, okay, so. Ooh, look at that move, yeah.
That's, I mean, that's the move we just looked at,
That's a nice move.
Yeah.
That's saying that the high wants to get hit. That's 270. I have this one at well, that was trading at 270, and the other one wasn't.
We're at 270. I mean, we're at 269.5. We're within half a penny of.
So we'll see what this shakes out, man. Yeah. But that's saying that now what you are doing, you're going into the downdraft that was out here from 3 days ago.
Okay.
It looks to me like you really just already got over that. You really, look at that, 2699. Oh my God.
Right to the, we're
You're right
there.
at it. But guess what? That has more contract volume. So that's saying it's going higher. We have more contract. We have 39,000 on that baby versus 7,900.
Either way, we'll see what happens.
We'll see.
We would have been paying about 3 pennies for the move. We'll be back in 3 minutes. Those numbers will be out.
Stay right there, folks. Tommy and I come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, there you go. Powell must be saying something. You're going to snap in about 2 seconds. You have the S&Ps right now up 6, Dow's up 62, Nasdaq is up 7. Natural gas.
So we'll see if we get the numbers out here. The expectation, Bloomberg users looking for a decline of 81 billion cubic feet. I haven't seen the headline come across yet. Maybe it's because Powell did start just taking questions 10 minutes ago.
Yeah.
But let's jump back to the Nadex platform and see what's happening. So no real price movement yet. We'll see how this shakes out. But looking just 269.55 currently, and we'll see how that reacts. The numbers aren't out there yet. They're not hitting the Bloomberg as I see.
You know what I almost wonder? We're going to look at this and see whether that pop is that they come out early by mistake or something.
It's intriguing that there's no market reaction yet, and they have not hit the Bloomberg from what we can see yet as well.
So let's see.
Yep, we got nothing as of yet.
No, there's nothing there.
All right, we'll keep our eye on it. That's very rare that that happens.
Yeah, I know. Pretty wild, man.
It is.
So let's go take a look at the S&Ps while we're doing that. Okay, so you take a look at this S&P. We got down to 26.98. Right now you're at. Look at this thing slowing down. Interesting. 26.17. So you're rejecting lower price. You know, what we did have out here yesterday is that you had volume on the move lower. So that's basically setting up that the February 9th lows more than likely going to get tested. That being said, we're still in window dressing. This is the beginning of it, man.
Yes, March 1st, sure.
And, you know, it's just perfect is that Powell's testifying. This would be about the most deviant thing that the market could do is get one more counter-trend bounce going.
And I see him in there saying strong labor markets should not trigger inflation. That was one headline coming across of
really interesting.
That, you know, they're just going to be sending snippets of his words across the headlines throughout his entire question and answer. Yeah. But that's, you know, if he doesn't think a strong labor market's going to trigger inflation, then there might not be as big of a incentive to really ramp up rates to curb inflation. So the market will like that statement.
Yeah. Oh, there's no doubt about that. Let's see if we got. Is that top live? There we go.
Yep.
So focus is very much on small and medium-sized banks to reduce regulation, most of which we are doing applies to smaller banks. Let's see. Okay, tax change policy is saying we don't know how it will shake out. Ask if tax change policy will bring more consolidation. I'm not sure it would change the trend toward consolidation over the years. Powell says participation by prime age workers is below the level of prior to the crisis. Wage inflation is not accelerating. Some additional tightening can take place without causing inflation.
I mean, they're going to like every time he says without inflation, without causing inflation, without causing inflation, you know,
Yep, there's no doubt about that. Man.
Yeah.
I mean, and we'll see how these, you know, what's happening here, that just as you said, Tom, right, the dollar is not liking what he's saying, and gold is. You know,
sure.
The dollar just went from 300 ticks up to 149.
And there we go.
There we go.
3 minutes late. What are they sleeping in the Powell meeting for that natural gas? So natural gas inventory stockpiles fell 78 billion cubic feet. I believe the estimate was about 81 we just looked at.
Yeah.
Let's jump back over to the Nadex platform. There's some volatility for you.
Look at that spike.
So the spike was up to, and let's just even put it on.
That's 272?
It is above 272. We're looking at a 5-minute chart. We're going to put it on a minute chart. So it spikes up to almost 273 right after the news, and from there we begin to slide down. So sometimes
267.
267. You know, so
And look at the market. The Dow's up 100, the Nasdaq's up 16, S&Ps are up 10.
We got volatility everywhere for sure. So these are now minute charts, minute bars we're looking at. And, you know, like we talk about regularly, if you're trading these, you want to have quick fingers and maybe have your orders in ahead of time if you're really looking for an expansion one way or the other. Because sometimes the first move can be so quick. It can be 10 seconds, 20 seconds, 30 seconds, and with that it can turn around. And if you have, you know, your sell order in to sell the bullish spread, you know, you might have gotten executed at almost your break even. Those two contracts combined were going to cost us about $28. This traded up to $272.9, which would be about $29 almost in value with the 2.9 pennies above. Pretty interesting.
So I just saw Powell just testified that he doesn't expect to see more wage growth either.
Okay.
That's a big one.
Yes.
Because that just took the S&Ps up 14.
Yes.
You know, because bottom line, folks, is that that's what they've been looking for wage growth for a huge amount of time.
That's,
so it's
that's
like,
always been the guess of where it's coming. Is it coming? Is it going to be seen?
And if he's not expecting it, well, guess what? If he's not expecting it, folks, rates aren't going up. Well, they're not going up as fast as the market
has
like looking for them to go up.
Yeah.
You know.
Yeah.
Pretty wild. So let's go take a look at this dollar first. All right.
Go for it.
Well, here. Unemployment at or near or even below the natural rate.
Yeah, and the same thing. Expect gradual hikes to continue to be appropriate path. Wages have only gradually
gradual's a big word.
Right, and he's over and over, right? Wages have only gradually started to pick up. I would have thought we would have seen more wage increases. I do think we'll see wages moving up.
This is dovish. Yeah.
And there's what you're talking about. That is a graph of the Bloomberg dollar spot.
Yeah.
So that's some volatility. And the dollar moving lower on the comment. So yeah, let's take a look at the dollar.
And the dollar, and this is right at the perfect place for the dollar to fail too, folks. Okay, because what we did yesterday is that we went into the downdraft, where the dollar, well, the dollar's been breaking down for quite some time, but right where we actually came down hard from, we did 91,630 to 95.30. You had 40,000 contracts traded. Yesterday we did 24. A close under 90.530 is the number.
Okay.
You know, that's the low of that bar.
We're about 150 ticks currently above that level.
And if we go intraday and look how this is shaking out.
It's quite a low pop to the downside.
It's not going to take, that bar there, it's not going to take much to get that down to, oh, look at that. So that's weird. That comes right to 95.60.
Sure.
You know, if we just take, and it's a good pop, man. Well, we'll see where this thing's going to shake out. If we go over to the gold contract, you're going to see just the opposite in gold. They had gold down $14. Right now, it's down $8.60. Now, what gold's doing to where it broke out topside December 29th. That's 1,300 even. It got to 1,303. If you're a bull, you want to see gold trade over 1,309.
Okay.
Where I'm going with that, that's the last swing point.
That's the low of February 8th.
It is.
Okay.
You know, and we'll see what's going to be a problem for gold. That being said, is that this is a big volume, 241,000. So we'll see whether it contracts. But that can get up to 350, 400 pretty easily.
With this type of action, the dollar right now, with Powell probably having plenty more questions to answer. I mean, he just started taking questions at 10:20, not even 20 minutes of questions. And we know how government works, as in the Senate's got some questions, and they ain't letting them go just yet.
No, it's not even close.
Right.
So this is going to be a trying time out here today. But yeah, let's go some of the higher volume stocks. So, you know, we have to get into the, we'll look at overstock.com, but that was getting hit out here.
So we have some SEC
OSTK.
investigations. Yes, OSTK. Down about 10% currently with SEC investigations regarding cryptocurrencies.
Yeah, so that's trading.
Yeah, I mean.
Down $4, $56.
So it's pairing some of those losses since we last checked.
Yeah. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's up 92, Nasdaq's up 20, S&Ps are up 10. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 102. You get the Nasdaq up 23. S&Ps are up 11.
How about we check back in on natural gas and see how we're doing? So we got quite a pop right after about 10:30. Pop almost up to 273, 272.9. Pop below, no, not quite, almost to 267, 267.05, and from there we're about 268. So 3 pennies to the upside, 3 pennies to the downside, and what's intriguing was that it was going to cost us about 3 pennies in total for both sides of that trade. So the interesting part of that is if you'd been quick enough to snag value to the upside, keep your spread that had bearish potential open to the downside, you could have exited both of those spreads for value, which is something that you always want to take a look at. I mean, and let's just jump back in. We were looking at the, sorry, that's the binaries. Let's get back to the spreads. We're looking at the noons, and the bearish one is the one that would have value right now, would be buying that back. So right now, even you have $17 of value to the bearish side. So if, you know, the whole trade only cost us $28, if you snag $25 off on the top side, you almost cover your break even. Maybe you start the trade off with a little bit of a bearish bias, so you look for any opportunity to break even if it jumps upward. You break even, and then you do get the deceleration to the downside, and then, you know, before you know it, you have a decent profit in there.
And when you're in the demo model, folks, remember you can just go to the TFNN, you know, hit the Nadex banner, get the demo model, put those orders in when especially if you're doing a volatility. Well, on news events, you should have the orders in. Because
if you know where you're pegging your price for,
yeah,
right? You know what I mean? Right. Just because, I mean, these are 1-minute bars that we're looking at. I zoomed this chart down too. So we got a spike up to 273 and back down to 271 all in the span of 60 seconds. And that, you know, I'm sure it was jumping around. And then in the next 60 seconds, we were below 269. So 2-minute span, you got to be quick for sure.
And you know what's amazing here is that, you know, Wednesdays we're talking oil, Thursdays we're talking natural gas. But the way this market's trading right now, you could actually look at some of these, whether it's the NDX 100 or the S&Ps. We just went from the S&Ps are, you know, up 6 now versus they were just up 14.
Now that's where you just want to be aware of the type of premium you're paying, though. What's your expectation?
Right.
Because ahead of Powell talking, ahead of the market action we got yesterday, and even the previous 2 days before that, I would expect that there was some serious premium priced into those because the market was expecting the possibility of some movement. You know, you have the VIX. What is the VIX trading at right now? Probably 20 at least. It was at 21 earlier. The VIX is right off the S&P, you know, and that is going to be 2031. And I'm surprised it hasn't even gotten more of an acceleration with how we've seen. But just look at over the last 2 days, we were down at 16, and we're now back over 20.
Yeah,
and that's going to be reflected in the price of the premium you're paying.
No doubt. Yeah. Now let's go take a look at some of the higher volume stocks out here today. Oh, let's get
so overstock too, right? That's what we were finishing up. Are they anywhere up there? Not quite, but they are a mover and a shaker.
Yeah. So
today.
in the journal this morning, folks. So I guess it's probably been a lot of things. But the SEC issued a large amount of subpoenas yesterday. One of them, well, at least one of them, happened to be Overstock.com. Yeah, it's you know, I mean, bottom line is, it looks like it wants to test that. It's not that. Oh,
I mean, it opened at 55. It's a good $1.67 off of where it was in the open. The low is 54.25. So you're a good $2.50 off of that low that we had pre-market.
Right. And let's see what they have to say.
Or even after the open.
Oh, the token. That's the deal. The Overstock shares slumped after the company received requests from U.S. security regulators asking for documents related to its plan to issue digital tokens. Oh, they didn't do it yet. That's good if they didn't. Overstock said Security and Exchange asked it in February to provide voluntary information related to its token sale. The company is conducting an offering of T0 tokens, digital coins that owners can use to pay fees. Oh, they are issuing it. Interesting.
Yeah, and I believe that was their big plan, that they got an acceleration to the upside on when they first announced it. And these initial coin offerings, right, the ICOs you'll hear about, that seems to be one of the riskiest arenas of cryptocurrencies because my opinion is that many of them are going to go to zero. Now that might not be the case with Overstock, okay? They're a huge public company. But any person in the world, any company in the world can have an ICO.
Oh, we can issue one tomorrow.
Exactly. And many of those are going to go to zero because nothing is behind them but the company. And if you're not a public company, there's nothing to stop you from going bankrupt and saying bye-bye. And you take in all that money and you're gone, you know.
And what happens, so the reason that the Security and Exchange Commission would get involved, and they've already warned everyone, right, is that they're saying that, hey, listen, this token is a security. Okay, so
does it probably has to relate to public companies, especially, I'm guessing.
No, it would be anyone. Okay, it's just like, you know, the private equity fund that we have, right? You can't just go out there and say, okay, this is how this works without a prospectus, without explaining to people that what is this. So the SEC has taken the stance thus far that these tokens are securities. Okay. Whether it's a public security or private security, there's plenty of private securities.
Yes.
So these people are taking a very large risk. Now, the people on that side, they have an argument. I don't know what the exact argument is, but they do have an argument. They have attorneys, and you know.
Oh, I bet it's going to be a battle, especially if you're a non-public company.
Right.
You know, and you're issuing a cryptocurrency.
Right.
There's an argument to be had over whether the SEC has some.
That's correct.
Has even legality to go after you.
And because, though, check this out, folks. Inside the SEC and the CTFC are fighting as to who has what. Is it a currency or is it a commodity?
But I would say that for public companies, they do have Oh, right. Because then you are dealing with shareholder value. You're getting price appreciation in the stock.
Right.
And it says the disclosure comes as SEC expanded its broad crackdown on ICOs by issuing a number of subpoenas to firms and individuals behind specific offerings that it believes might be breaking the law, personal direct knowledge. But yeah, I mean, you know, when you're that's a material fact for a publicly traded company.
Oh, there's no doubt.
So there's no way that overstock, that'll be a tougher battle for public companies that are trying to do that, as opposed to a non-public company.
It will.
Yeah.
It will.
Yeah.
And particularly in the United States. Now,
very much.
Now,
yes.
the ICOs, you know, you're issuing an ICO and you're issuing them overseas. The way that works is that if you are issuing them overseas, the bottom line is that you still don't supposed to be able to come into the United States space doing it. Now, they've had a hard time with that for a long period of time because of the Internet. Right. It was very easy before the Internet. Well, guess what? You know, you can have the disclosure on your website that, hey, we don't take business from the United States. Well, guess what? If they have an offshore account, well, you can take business from that. That's, you know, that's an offshore account. That's, and of course, what ends up happening with the cryptocurrency world, you don't even know there's a new, I would say, definition for offshore. Like, where is it?
Yes, very true. There is no shore to even.
No.
Everything's offshore, right?
Yeah, totally.
How about Best Buy? Best Buy had some earnings today.
And they're closing all their small stores, too.
Is that what they're doing?
Yep.
Okay. It seems to be the trend, right? You know, if you're going to be in retail, you got to have the cream of the crop.
Let's say, so the first headline, overcomes Amazon threat with best Christmas since 2003.
They got to love that headline.
They do. So let's see, earnings per share adjusted $2.42. Look at the revenue. Nice revenue, man. Estimate was $14.49 billion. They came in with $15.36 billion.
Yeah.
You know, I was in there a lot. I mean, they came back, man. No two ways about it.
I haven't been in one in a while, actually.
Yeah. Stay right there. Tommy and I come right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Welcome back, folks. Volatility in spades. Dow's up 37. Nasdaq is up 1. S&Ps are up 3.
Pretty remarkable, right?
Yeah. So, just quickly, we'll go to. I just want to see, since we've been on, how many times this is going back and forth. So, put this back into like one day. Look at that market.
Yeah.
Pretty. Is that 10 o'clock right there?
That's the opening bar.
That's okay. That's 9:30.
But still, just go since 9:30 because it's a good swing down, up, and back to where we were. Can you just back it up to 9:30? Because what's the high of that 9:30 bar? So the high of that's 27.20 on the dot.
Yep.
We come all the way down.
27.10. My God.
26.98.
Okay. Yep.
22 points.
Yep.
We come up to 27.31, 33 points.
Yep.
And now we're down.
And
huge. Yeah.
And folks, at that high bar, we're going to be going back to that high bar. That's a high volume bar. So with game out there is a 27.31, which is a trip. Let's go over to Amazon for a second. What the question is that I think it's going to get into that low, and I do. I wouldn't short it right now, and this is why. I would wait till after window dressing.
Okay.
Because bottom line is that you're over 14.98. Okay, that's what it's been testing. I'd just wait. You know, I'd wait till next week.
Sure.
Actually, you know, where today, tomorrow, there's still going to be money going into that market. That S&P has a high volume spike. I know we're down right now, but guess what? It's only at 11 o'clock. That's the real bottom line. Pretty wild, right?
Yeah.
Let's go into the NQs and take a look at the NQs. The spread in the NQs are going to be insane also. So this here, look at that. Man, you got to love it.
Huge, for sure. Talking about 80-point swings in either direction. 68.80 down to 6,800, up to 6,900, back down to 6,850.
I have to love it.
Hold on.
Stay right there, folks. We get swim lessons coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back, and our man, Mr. Andy Heck. Thanks, pal.
Thanks, man.
Look at him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining